Sheila, UAL after the close. Feels like you're not necessarily thinking it's going to be an exuberant outlook, but what are you expecting?
I think the only thing that could help them is probably the obesity drug is lowering fuel costs. Yeah. I think airlines are in a pretty bad spot right now. We saw that from Delta's print and then Save pre-announcing last night. What we're seeing is, I think, a case of consumer weakness at its best. Delta's implied main cabin pricing was down high single digits year over year. Spirit implied was down 11%. So we have United down 1.3%. That looks a little light. American's probably going to be a lot worse than that, as well as Southwest, which is in a worse spot given what parts of the U.S. market they serve and how much U.S. exposure they have. So pretty bad story on the pricing side.
Now, how does that fit with, record TSA volumes? Is it really just a pricing issue?
It's pricing, and airlines are right now saying it's because we have too much capacity in the market, up 5% in Q2 versus last year's levels. So we're flying 5% more aircraft in the U.S. But we know Boeing has planes delayed. So what if Boeing actually gets its act together and there's more capacity in the market and you have these low-cost players being irrational and not restructured in the market? So I think it's more of a case of consumer weakness, although you're not seeing it on other travel stocks like hotels and cruise lines.
Sure. UAL does have very substantial international exposure. That should be a help right now, if I'm not mistaken. I mean, what are the key things to look for in the report and the outlook, do you think, for United?
So United, I think, is the best positioned airline. One, because of its premium seats, above more so than anybody else, with the exception of Delta, and its international exposure, of which 20% is Europe. And Europe is really transatlantic because wide-body capacity is still pretty tight. We're seeing pricing power there, although we expect it to come off a very high comp last year, up 25% on price year over year.
Sure.
So international exposure, more premium seats, and it's coastal hubs in the U.S., very much New York, San Francisco focused, versus Delta that's kind of getting eaten up by the lower cost carriers in the southern part of the U.S., in the Sun Belts.
I mean, it's certainly a challenging setup, I guess. And of course, the stocks have struggled a bit in the last few months. But, you look at UAL, it's like under 5 times, expected earnings. I know that's not always exactly on face value, in terms of cyclical earnings. But what does that imply in terms of what we think this company can earn in the next couple of years?
Yeah, we have a buy on United and Delta. Yeah. Both of them are printing mid-teens margins. So despite this pricing deterioration in the market, they're both pretty good companies trading at a 70% discount to the market. Like, that's what they're trading at. They're and they've argued for a re-rating. Historically, they've traded at a 50% discount. So I think that there's still room for a re-rating. But the current market position is not helping the cyclicality of these airlines. They're viewed as cyclical. Pricing power in the market doesn't really exist, but premium is still holding. It held with Delta up 10% year over year. So we'll see what United says, but I think it's going to be the best print out of the airlines, but overall, not a good Q2.
Now, you had said, oh no, what if Boeing gets its act together and starts delivering planes, which I know you also cover Boeing. What is the likelihood of that at this point?
It'll happen one day.
Yeah.
I'll be on the show and it'll happen. Right now, Delta's betting that U.S. capacity will be up 3% year over year in September. So the market will rationalize pretty quickly. But let's say Boeing does get its act together, actually delivers the planes they say they will, that number will change by 2 points, so up 5%. So I think in 2025, eventually Boeing will deliver more aircraft. Southwest will get the planes it needs, the right ones potentially, like the MAX 7. So I do think you're going to see this problem persist in the airline industry for at least the next 6 to 12 months, because Boeing's going to improve its delivery rate off of really COVID levels today.
And United's, what you would characterize as its Boeing problems, is it kind of already got workarounds, and where does that all sit? In terms of its expected deliveries or what it's going to do with those orders?
It's cut CapEx a ton, and that's why it's generating really good free cash flow this year, because the aircraft they wanted, the MAX 10 is delayed. It's not certified yet. It probably won't be certified till 2026. And so that's helping them generate free cash flow this year and next year. The reason they want those MAX 10s is if you think about New York markets, we're flying 40% more people into New York City versus pre-pandemic levels.
Wow.
So there's no way to get that number higher. Right. Gates are full. You got to do it with bigger planes.
Yeah, I support the idea of no more. All right, coming into New York. Sheila, great to talk to you.